I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in the next week, and hopefully lots of great ideas and opportunities for you throughout the show. This was a week when the stock market did make another high, though the moves were narrower, and it was a choppier week. We saw the market manage to just eke out a new high on that news when the FOMC came out and made their announcement on Wednesday, but we saw it quickly reverse after that. I'll show you that in my 60-minute chart coming up real soon. S&P, NASDAQ, they were fractionally higher on the week. Dow Jones up almost 1%, and the Russell actually, because of a pretty good sized midweek swoon, was down a little bit on the week. FOMC, well, their announcement did come out on Wednesday, and as expected, they raised interest rates 1/4 of a point, so that takes it up to 50 to 75 basis points. Still incredibly low historically. They also said that they're going to up the number of rate increases they expect in 2017 from 2 to 3. That actually did get the markets a little bit nervous, and we saw a lot of selling coming in the bond market, though it was hesitant at first. The same thing happened in the stock market, hesitant, but then some good size selling comes in. Yellen says inflation firming a little bit, not exactly her language, but that's how I heard it. And she said, and I think this is ridiculous, that the level of accommodation is modest. Come on, $4.5 trillion balance sheet, 75 basis points on the top end. I mean, that's moderate accommodation. I don't know what school she went to. Maybe it's the school of Keynesianism. That doesn't work. Anyway, she also says that the risk to the economy is balanced. So she tried to be neutral. She doesn't want to upset the markets, of course, because it seems like that's what her greatest focus is. Truth is, there's a window of opportunity here for the Fed. What does that mean? Well, we have a period of potentially very high stimulus coming, according to what we believe is going to happen with Trumponomics. If that's the case, we should get a spurt in economic growth. I wouldn't be surprised to see some 4% GDP numbers in the coming year. And if that's the case, well, they better not miss the opportunity to normalize, because there's this window for them to do that. And you can't be surprised if you see 10-year yields somewhere up around 3.5% in the coming year. But I'll talk more about that in my coming year-end show that I, always do. As far as the other stocks go around the world, while the U.S. stock markets held, the Eurozone also flat to higher. Emerging markets, China, they got hit. As this dollar goes up, it really puts a squeeze on them, and the dollar even got stronger this week, as the focus is on the relationship between the yields in other currencies and the yields here in the U.S., so money keeps coming into the dollar. That might be switching. More about that to say, and I would say maybe a couple weeks away. The way that China and emerging markets can answer this is, well, they can have higher interest rates, and that would maybe stem the outside flows. Big trouble in China is that the yuan is really getting hit, and they could put on capital controls there in China, and that would be an ugly thing. We're already looking at the prospect of a trade war, so who knows how that's going to work out. And emerging markets, these economies are choked as the dollar goes higher. Essentially, all the money that they owe, well, they have to pay more because of the value of the dollar. So that is choking them also. So we saw a lot of weakness there in China and the emerging markets this week. But the Eurozone also has some really big problems. This populist movement, that we saw here in the United States, we saw in Brexit, this nationalism. Well, the parties over there are growing in strength that support that, especially the ones that want to leave the euro. So that's why we think that the euro is in trouble. And forget about what Draghi's doing. He says he's going to extend QE, but at a lesser amount through late in 2017. That's not going to do anything in here. And in order to stop this, stem the flow, they're going to have to raise interest rates in the Eurozone too. So we're going to look for that in the coming year. And I'm going to talk more about this again in the year-end show, but I think there's a euro crisis coming out there, and the stock market might not like that. And that might be what gives us some, at least, bounce in the bond market and maybe a correction or something more in the stock market. Gold and silver, as the dollar got strong, they got crushed this week. Dollar fell some 30 points. Silver fell $1. It was over $1 down in one day. That was like 6%. That was a big hit. Oil, had a week that was around unchanged. Monday got a big boost on that deal where producing nations joined in with OPEC, but that couldn't hold, and the range in there was a little bit higher than we expected, though we did not expect it to be. We thought it would pop and then come down, and it's basically what it did, but it made a little higher numbers when that deal came out Sunday night, Monday. This year, we're going to see some big changes in tax policy. So it's likely that for the stock market, for stocks through the end of the year, that the strong will stay strong and the weak will stay weak. So we're not looking for a lot of changes. Stocks not likely to give a lot of ground, just small pullbacks here through the end of the year. But come January, there could be a lot of surprises out there, and especially as we get closer to inauguration and past it, as we get into the first 100 days for Donald Trump, that is going to be a circus, and we're going to see potentially some much bigger volatility here in these markets. Two-sided trade probably, and I know traders out there will be very happy to see that. All right, let's look at what happened in the stock market in this last week when we look at our 60-minute chart of the S&P 500. And you can see in here that what's happened is, well, you see that line coming all the way across? We're going to say that line is significant because you can see it's making a pretty big head and shoulders. So want to point that out first. Remember, this is a 1 hour, 10-day chart, but it is still a significant, there you see your left shoulder, and here you see your head right there, and here you see your right shoulder right in here. And there is your neckline right in here. You want to see what that looks like? Well, there it is, your head and shoulders right there. So that could be meaningful. And then the distance between the top of the head and the neckline, which is about 25 points, kind of points to a 25-point pullback. That's going to kind of line up with what we're thinking about when we look in the, get to the short-term view of the coming week. So let's take a look at what happened in here during the week. Well, that big pop up that you see there on Monday, that was the oil deal where it came up that strongly, and that didn't last, of course, and actually the oil reversed on that day. Producing nations and OPEC make a deal. Stocks actually softer on the day. On Tuesday, stocks resumed to the upside, getting ready, of course, for the FOMC announcement, and that generally brings an up rally, so people were buying in there. Bonds actually gained, got a little bit of a rally, but that didn't last for long. Come Wednesday, world markets were softer, waiting for the Fed. Bonds rallied early. You got to think, is this all priced in? Is actually, the bonds have about made their lows in the next day, and the stock market made its at least trading high over there. So how much of this is priced in as far as what Trumponomics is going to look like, and the fact that the bond market got hit so hard? I mean, we're looking for a bounce in there. So you could see in there that the big decline came after the FOMC raised rates, and when it really was digested that they were going to raise 3 times, and that got them thinking, I mean, maybe the market is going to suffer from higher interest rates than they think. And believe me, the stock market, which right now is getting funded by the bond market money, that is not likely to last for a whole lot longer, and much higher rates are going to bother the stock market. So we'll see how high rates go. I don't think they're going to go a lot higher now, but maybe later in the year, then maybe a lot higher. So on Wednesday, we got that big decline in here, and all of that talk by the Fed did not rescue the market on that day. Thursday, gold and silver get an absolute crack. I mean, really that big decline. China down big. U.S. stock market was actually up, tried to rally. You could see that shooting star, and then it reversed to the downside. It really has not been able to get its footing since the FOMC raised rates. You can see that, and that really is maybe a sign. So Friday, you see, tried to rally just by a little bit, but couldn't, and pretty much Friday it's been sliding all day as we do this show with about 2 hours left to go in the day. So that, you can see, is our look at what happened in the short term during the week. Let's take a look at our economic calendar for the coming week, and we look at earnings also. You can see what's happening before the opening and what happens after the close. Monday is Lennar before the opening, a couple big ones after the close, Federal Express and Nike. On Tuesday, Micron, man, this has been a monster stock. They report on Wednesday. We've been bullish in there, and now it looks like it's stalling a little bit. We're going to look for, even with good earnings, some kind of a pullback in here, even if it gets an upside pop in there. As far as the news goes, nothing in there that we think is a major mover. The GDP may be the biggest thing coming out here on Thursday, but that's not likely to be that big of a mover unless it's a horrible number, and then of course you could get a bond pop, and that would probably bring a stock market decline. So that is our calendar of economic events for this coming week. Let's take a look now. We're not even going to take a break. We're going to jump right into our stocks in here and take a look at our best and worst stocks for the week. How do you like that? We won't even take a break. All right, so let's switch over to our charts, which we always show you, and take a look at our best of the week. And the first one we're going to look at is NVIDIA. That is NVDA. This is in the specialized semiconductor category. With Xilinx and analog devices, really incredibly strong upside move in here. As a matter of fact, the analysts upgrade this stock today, and that is still a incredible thing when they gets this kind of a move. This up 9% on the week. There's not a lot of gainers this week at all, and this stock, how about up to almost 200% on the year? Just absolutely outstanding move in there, incredibly strong, and we would expect to see the stock like this get some kind of a pullback, but overall it's not giving a whole lot of ground at all. So I'm going to switch, got a little stuck in here, so let's just get my cursor coming. There we go. And so this cyclical pattern in here looks like, you can see right in here, that rhythmic motion. I mean, this is absolutely nutty. And it's the distance from this right here, this 13-week moving average, is the furthest it's ever been. So we call that quite an overbought condition. But I wouldn't be surprised to see just some modest pullbacks, as this one really is a giant. Xilinx is the next one we're going to look at, and it's in the same group. And this was listed as one of our best 12 stocks for the year back when we did that, when it was right over here, and it's up about 30% on the year. And you can see the cyclical patterns in here also. It's kept tracing out bullish patterns. Analysts upgrade this week, as they did in NVIDIA, and it was up about 7% on the week and up about 30% on the year. So that's a really strong one. The next one that we're going to look at is Mondelez, MDLZ, which is in the food beverage category. Interesting pattern in here. This one's got rumors out there about the deal with Kraft. And note the cyclical rhythm in here, okay? So you see the rally, see this low right here, which is right at this nested bottom of cycles. It rallies and sells off right into this particular perfect time. And then you see these half cycles in here. Well, they show up beautifully here, right? And then you get this megaphone, and it looks like its buying came in at the perfect spot. You know, where there's smoke, there's fire, that old cliche. I'm wondering if there isn't something really going on in here. So this is the kind of pattern where the first week up off of that important low is a big upside week. That's usually not the end of it. So we're actually looking for Mondelez to get a big further gain in there. And I wouldn't be surprised to see this making a new high at $50 before you know it. So that's Mondelez. Last one in the best of the week, as there's almost nothing in here, is Eli Lilly. Now, this one, analyst upgrade in here, and I think this is really a group that is going to suffer a lot with Donald Trump in there. They didn't realize how much Donald Trump would try to lower drug prices, as Hillary Clinton would have done. You get this big uptick right over here in the because of the analyst upgrade. That's the weekly chart, of course. But this area, 75 to 76, is a lot of trouble for it. So maybe it has a couple, 3 more points on the upside. But overall, we do not like that stock at all. So that is the best of the week. Really, there was not a lot in there. I've got a lot more to show you, however, in the worst of the week. We're going to take a look at this group of drillers that got a lot of downgrades in the offshore drillers this week. And the first one we're going to look at is Noble Corp. NE. This stock in here in Noble, you'll note the beautiful rhythms, the cyclical rhythms that you see in there. And now you see this pattern right here. That is what we call a dark cloud cover. Now, dark cloud covers, evening stars, engulfing patterns, they tend to give you cycle highs. Here you can see an evening star that made that high. It actually was a secondary high. Here's an evening star and an engulfing pattern right here. So this is a worrisome pattern, and it says to me that rallies are likely to fail in here, and maybe there's a pretty good downward trend coming in there. I'm going to show you a bunch more of these stocks. Here's Diamond Offshore, and you could see that pattern, almost an engulfing here, as this green rising phase brought that nice rally, right? But now you're getting that signal right there that it's rolling over, and you could see our cycle projection right there that points to the fact that it is likely rolling over. NBR, you see right here, this one also rolling over. This was one of the big movers. This looks like it comes down in through February. What's really cool about this is that you can see the head and shoulders pattern here. Here's where it breaks out. We watched this break out, right, and said that, you know, likely to make the measurement, and it comes right up to that measurement perfectly and then starts to back off. So kind of think that NBR still has problems in here now and wants to correct, and this is the perfect spot for it to correct from. Transocean, which is RIG, well, there's that inverted head and shoulders also. It's not quite making it up there. It's not quite a sell signal in here. I would say this is one of the stronger and best ones. So this is not one I would sell. I would say that this one probably is in a little bit better shape. So that is a look at the drilling stocks. Now, the stocks in the silver category got hit also, as silver had that really bad down day on Wednesday, and it hasn't gotten any better. As a matter of fact, we're going to say silver stocks either have broken down or are very close to breakdowns. I'm going to show you what that looks like in here as we look to AG. This is First Majestic Silver. And for those of you that follow the cycle analysis that I do, you can see this was an amazing cycle in here as it made this big rally and had what we call a right-hand translation, a minor correction in here, and then a big rally again. That was perfect, right? But then when it had this big decline, it broke underneath this cycle low, and it was really worrisome at that point. Now you could see that cycle low, and this is where we're coming across right here. So the next rally came, and look, it was really just a bear flag. Right now it's broken down. It's broken under this cycle low, and it points to a decline all the way out here till February. Man, I do not like that. And I was an accumulator of silver stocks, and when I saw the breakdown in patterns, I got out. And the only trades I had on were silver versus gold, and I actually got out of that just in time also, because silver, that big dollar down day, really took the steam out of that. And we're going to look again for a better time to buy silver and short gold, but not yet. Now here's the PAAS pattern. This is Pan America Silver, and this one you can see has not broken down here, and that low actually did not get below that low, so it's a better pattern, but it still sucks because it's almost all the way down to here. So that means that really this is curling over and likely also all the way out till March to decline. So we're going to look for breakdowns in here, and I actually think that this is a sell, and that when we get a bounce in silver, this will probably bounce, but we're going to look for a breakdown in there. Hecla looks absolutely the same way. Let's take a look. First of all, these silver's down 15, 10, and 9% on the week. So really some bad ones. In a similar category, the steel stocks. Here's Allegheny, ATI. There's your bearish engulfing pattern right over there, and this really looks to us like a bad pattern. It's kind of an oddball pattern, as when this is the DBB, which is the base metals, and when that had that downward cycle pattern, this actually broke deeper, and then it rallied with the rest of the steels when Trump pushed these all up, and now this is giving you this engulfing, so it looks like it's going to roll over in here. I do not like that pattern. Down 14% on the week. Other steels also weak. Nucor and Schnitzer on the downside. Look at U.S. Steel. Now, U.S. Steel, of course, an American steel company, really favored here. But this stock, it moved up from 15 to almost 40 in just really a couple of months. And that, 16 to 40 really, and that says to me that has come just too far. And if the rest of the steels are weakening, this one is going to weaken also. Full disclosure, I shorted it today, and I'm looking for a pullback in here into the low 30s sometime into this January, February period. So it's really gotten some good upside movement. You can see in here that the short-term pattern to us looks like it is rolling over also, and it looks like there is a bear flag that's forming in here and kind of a head and shoulders top. So kind of think that this week could bring some more selling here in U.S. Steel. So take a look at that one and see if it fits into the way that you want to trade. Retail stocks, I mean, they really took it in here. Usually when you get into the Christmas season, you get some big moves on the upside in the retails. This is a different year. It's a different year because, well, Amazon is just killing everybody. But then you got to wonder if Amazon's going to make any real money. I don't love the pattern in there because, well, everything you buy, I mean, the shipping is mostly free, right? If it's Amazon Prime, I can't believe we've been buying something from Amazon 3-4 times a week over these last couple of months. For that reason, don't even go out to the store. So that's what's happening to these big box retailers, and teen retailers are in bad shape also. Analysts have downgraded these stocks this week, and some big hits. Take a look here as we switch over and look at JWN Nordstrom. And this one is just rolling over and looking ugly. Down some 14% on the week as analysts have downgraded this one. And this one looks to us like, you see this key area right there? It's just about a breakdown. And what does that mean? It means that this rally came and went. And you've got all this time out into like April before this decline is over with. That is so ugly. I mean, all of these big box guys look so bad. And Nordstrom Rack, I thought that was going to save them. I went in there shopping the other day. I couldn't buy anything, which was a big disappointment. I didn't like what they were carrying this time. I bought stuff there before. Take a look at SHLD, down 14% on the week. This is a major breakdown. Not that it hasn't had major breakdowns all along the way. Breaks under this low, continues on the downside, breaks under this key cycle low right over here, and breaks on the downside, breaks under this key cycle low, and oh boy, here we are under that low, and that says we said it was going sub 10, and there we are. It made a low today of $10, so it'll be sub 10 before you know it. It's probably going to be sub 8 before you know it, because this company is in massive trouble, as is JCPenney. JCPenney, we think, has got, which was down 12% on the week, and this was on our list of riskiest stocks for this year. It actually has been in a wild swing, and it's up for the year. We said riskiest for the year when it was trading down at 6.5. It actually at one point got basically a double from there, and still the company has never been anything but in huge trouble. See that big bar right there? We think that's the beginning of the death swoon, and this decline out into February, March, some rally in here, all the way down. Next year, absolute collapse. That's what we think, and don't be surprised if this shows up again on our riskiest for the year, because we think it is one of the riskiest stocks for the year. In the teen retailer, ANF, take a look at this one right here. We've been negative on this. The momentum has been solidly negative. All of the news has been negative. Another big down week in here, down 14% on the week. Let's just take a peek at the daily pattern, and you can see that the momentum has gotten a little choppy. It's consistently been under the 89-day moving average momentum, turning weak again 4 days ago, and just a incredibly sick-looking stock. And they're really talking about sales not being too good during this Christmas season in these teen retailers, and that's a big problem. Urban Outfitters down 10% on the week. Macy's down 9%. Dillard's down 8%. Decker's down 8%. And basically, we think that the retail section is all really, really big risk. So that is our opening segment, our best and the worst stocks for the week. We're going to jump right into our short-term view. Like I said, this is a different week. And up until this week, for the 16 months that we've produced this show, we have always done our short-term view, including 5 major markets. We're changing that now, and that means that from now on, the show is only going to have the stock market short-term view in it. And then there's a special members video that's also produced on Friday that has a very extended version of the short-term view for the coming week on 5 major markets. So I don't want you to miss it, right? So we have a special. If you send me an email to slim@askSlim.com, I'll send you the link, and you'll be able to sign up for a month to see what that looks like for half price. That's only $16.50, and you'll get all of our full library of videos. We do 4 videos now, 5 every single week. And so we're constantly updating the library, more than 200. So I think it'd be really worth it to you. So let's get into our short-term view for the coming week as we look at the S&P 500 SPX. So what we want to look at right in here always is what we said for the last week. We'll give you a little accounting that of all of the markets last week, we were at about 60%. The stock market, we're only going to really get half credit, as the dip that we were looking for didn't get quite as low as we thought it would. We thought it would get a little bit lower, but it did not. And this is actually the weekly chart, which is not the short-term view. So let's just go to the daily chart, as we always do, and there you go. So here is what we were looking for. Now, the pattern we suggested last week was that we would come down and then get into the minor support zone, which was a little bit lower than this. It was about 220 something. something at the time and then have a rally. So we had the right shape in there, but we didn't get the depth of correction that we thought. And what we were looking at was, first of all, this big pattern right in here and the duplicate right there, right? And it made up of two parts that you can see right here. So we thought this part was going to end early in the week, and we got that. And that the rally would come, and we got that. So pretty much that is in line with our expectations. But that is what we think is going to be a very difficult time for the stock market in the coming week, because we think that this smaller pattern right here and this bigger pattern right here, which takes you down to some 18th day, they're all lining up. So we think that minor rallies will fail, and we're going to test this minor support zone right in here between 22.39 and 22.30. There's a potential for it to get lower than that, but we doubt it. We think that upside momentum is still strong. And for those of you that tune into our full expanded version of the short-term view of this week, we'll show you that, the momentum in there and the momentum in all of the four indexes, and you'll be able to see which ones are stronger, which ones are weaker. So we're kind of looking for a little attempted rally in here and then roll over and decline this week. That would probably coincide with the bond market getting a little bit of a bounce. Again, we're going to look at all five major markets. We'll be looking at the momentum in those markets besides the cycle patterns that we'll project out on, and also doing comparative grid charts where we look at instead of just gold, we look at all the metals on a short-term view. Instead of just the one currency, the euro, we look at the top four traded currencies in there. So we do that through all five of the different major markets that we look for on our short-term view. That's going to wrap it up for the show today. I'm certainly hope that you send me an email to get that link, and then you can take a look at all of our videos. I hope it's a great weekend for you. It is going to be very cold here in Chicago, dipping down to 11-12 below on Sunday. Crazy December. It's always crazy out there in this world, and I want you to be really safe. And we're always wishing you great trading.
Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been